Well, my friends, that was another good day in the markets today. I'll tell you what, I will take the green that we saw today with a little bit of wildness from the bottom to the top, back down to the bottom again. If you're watching minute by minute, for example, as I did several times throughout the trading day, it was absolutely incredible to watch things shape up. I'm going to share some commentary with you from today, from the inflation reports, what we're looking at, how the market could move between now into June, as we're pretty much in the middle of May right now. Tomorrow's my biggest sister's birthday, my oldest sister. Not going to tell you how old she is, but an early happy birthday to her. And guys, if you want to see more of my analyses, my buys and sells, the other panel experts, we've got a community of thousands of members. There's a link down in the description for the Discord. You guys can come over and be part of that community. I'll tell you more about it later. In the meantime, let's jump into trading economics. Take a look at PPI, what we got for today. There we go. So PPI, what did we get? Well, we got an upward revision for this number right here, which is the month over month, which was negative. Now it went to flat from last month down to negative 0.5. So this actually reading a bit lower because of that upward revision that we got. Same thing here. This one was also negative, revised upward to 0.4. And then we got another negative print here, well below consensus for what we have. The market seemed to take that pretty darn well. Then we had Jerome Powell come out and speak. Nothing really was all that said. The market was worried about it, but I will say that there wasn't really too much that was remarkable that the market really seemed to care about. And I think one of the reasons for that is what we have over here for the Federal Reserve Bank of Atlanta GDP now. And the thing that we got today based on PPI and a few other things is that here's the paragraph that I want you to pay attention to. 2.5% is what right now GDP now has for Q2. So we had a negative read for Q1, which honestly could be revised positive. As a matter of fact, the more things that come out, the more we could potentially see that happening. So we'll keep our fingers crossed on that one. But in the meantime, looking ahead to Q2, being positive like it is, this sort of puts us back on track and away from recession. And the market's like, well, no bad news, so I'm just going to assume it's good news. I think that's a great way to encapsulate the movement that we're seeing in the market right now, is that in light of no bad news, we're going to keep on saying it's good news. We're going to keep the direction going that we have. That could still come with some softening, more so than what we saw today. Once again, I'll talk about that. That revision was up from 2.3%, or I should say the estimate changed up to 2.3%. So what does that look like in graphical terms? There's a little chart here for you that you can see when it first came out. The Atlanta Fed GDP Now number that we got came out to be positive. The market loved it. A little bit of a drop on that one. The market was like, not so great. What if it keeps going down to up and then up some more, down a little bit, and then finally up some more, up higher than it has been the entire time since the Q2 numbers started on April the 30th for the Atlanta Fed GDP Now. And basically it's saying, hey, currently no sign of technical recession. Well, let's keep going. The market's like, we'll deal with it when we get there. So what do we got to look forward to for that? Well, if you go to release dates down below that chart and you scroll down a bit, you'll see that tomorrow we get more numbers coming out. Housing starts, import and export prices. We'll see that treats it. Really, I don't know that that's going to change it a whole lot. I think that we're still going to be sitting pretty as far as that number goes, being positive and up north of 2%. So personal income and outlays, that's going to be absolutely huge for that update for the Atlanta Fed GDP Now. That's not until May the 30th. And honestly, if we get good tariff news, good deals happening between now and then, that could be a very positive thing. If we jump over to the trading economics and look at Thursday, May 29th, what you'll see on there is that that's when we get the second estimate for Q1 GDP. And then, like I said, the next day on the 30th is where we get personal income and outlays, which includes the PCE numbers, the next inflation numbers that we get. Looks like so far we don't have a consensus on that. Trading economics forecast coming in a little bit warm on that one. Honestly, we'll see. The core numbers are really what we're looking for that. And then after that, the next big thing that we have is the June meeting for the Fed. So, guys, I think now's a good time to transition into the charts. And let me just say that we don't have a lot of red lights necessarily along the way. I've mentioned this before in my videos that once we got through that hurdle of April and the jobs numbers in early May and everything's looking pretty, I said, watch for the inflation numbers. Well, we got the inflation numbers and they're not even standing in our way right now. So the next thing we have for inflation is the PCE numbers. Then we have more labor market numbers, which honestly, they're probably assumed right now to be okay. Maybe the market sweats it. We'll see when we get closer to that. Watch for the first week in June. And then middle of June is when we have the next Fed meeting. That's the next time that things probably get a little bit tense for us. We want to watch and see what gets said around that time. And then after that, we start to trickle into getting to that point in July where we start to reach the end of that 90 days for the tariffs to find out what's happening, what deals have been made. The market, we'll see if it gets nervous about that or if significant progress is made between now and then. So let's put up the charts here. Quit holding this thing off. Quit talking about it and just show the darn thing, Dr. Stock. Let me put this up here for you. So there we go. Here's what we got. So this line that I put on here for you, this dotted line straight across your screen, that happens to be at 521, which matches with this peak or this lower valley that we had right in the middle, just a minor low that we have, not a major low like what we had back here on the 13th of January. And that's pretty much in the middle of the two major highs that we've had on the Qs, on the NASDAQ 100 ETF that we're looking at here. As soon as we got to that value, we retraced a little bit, but we did close up. That last hour or two of trading is really where we saw that upward movement. If we go over to the SPY, we actually did break up above that dotted line just a little bit. We closed above it. That's good. To take us relatively to where we're at for the Qs, that would take us up to 596. We want to be watchful for that as well. So we're in that area of chop. I don't know that we're necessarily going to be all that aggressive, but we'll have to watch and see what happens. Like I said, we could have a little bit of softening before we really get moving. Again, we're going to have to watch, and I'm keeping watching this gap that we have not only on the S&P 500 ETF here, SPY, but also for what we have back on the NASDAQ 100. We have that same gap to fill back there as well. I'm watchful for it because honestly, that could be a major time for us to load the boat a little bit more before we start to move upward. I can't speak for anybody else. I'll speak for myself, though. That's something that I'm kind of hope happens for us so that we kind of hop in a little bit cheaper again, and then with a fresh momentum move back up to the upside. Don't know if it happens, but I'm watching for it. IWM chopping sideways a little bit for us, have a gap to fill. We might have that bearish island play. We'll have to watch for that to see if that's what we have. We don't know yet. We'll have to see if there's a gap down that follows, but I will tell you that we do have a bullish sign right here that the 20 crossed over the 50. We're still south of the 200, so overall still in bearish territory, but with excellent daily momentum. When we look at weekly momentum, we're just above 50, and then monthly momentum above 50 as well. This is just, for IWM, this is a beautiful, beautiful setup for further upside for this. Maybe we do retest that 200-day in the very near future. We're going to have to watch and see, especially with the performance that we've had with the Qs, with SPY. I think we might be getting into a point in time sometime soon where we start to see that outperformance for oh my goodness, for IWM. We'll see if there's some pain in the meantime. NVIDIA kind of an indecisive candle today, and we did have a little bit of that softness. Let me put down the technicals for just a moment here. So we actually broke above yesterday's high that we had on that, peekabooing up a little bit, but we also retraced low down below yesterday's open, and we closed somewhere in the middle. So this candle that we have here that has that narrow body, the high top and bottom there, spinning top for us the next day could show us what exactly we're going to get. A candle up above is a very bullish signal for us. Candle down below, a little bit of a bearish signal, but we do have down at 125 is where we have some massive support for us with the 200-day, and like I said with SPY, with QQQ, I'd love to see us back down there just for a quick moment to load up again with some dry powder, get us a fresh start, a fresh jump, a new launching point, if you will, for the bulls to recover a little bit and for the bears to get a little bit overconfident so that they can be really overrun in a big way. Another next leg up, if you will. Tesla, what did Tesla give to us today? Down a little bit from what we had before. I had a little bit of softness on there, and while we are up against some pretty massive resistance, we need to get up on top of that resistance. We actually closed right at the bottom of that red rectangle that I have on here for you. We need to get back in there and above it. If we close above 352, we're in really good shape for that next leg up on Tesla. Maybe we get a little bit of cooling first beyond what we've had now. We'll watch and see. Bitcoin actually, its hourly chart's pretty interesting from what we have right now. A lot of sideways movement since, let me see, May the 8th. Everything since then has been a bit choppy for us, chopping sideways, if you will, kind of being a bit boring, but it is staying above the 5 and the 13 and the 20 and the 50 SMA and EMA. And let me take down the EMAs for just a moment because we might have the 50 cross over the 200, which would be a golden cross moment for Bitcoin, which could be a bullish thing. Watch out for this rectangle resistance that we have up here, this area of resistance. Got to break through. If we can sit on top of that, we have a good shot at the new all-time highs, or at least revisiting the all-time highs. Got to punch through it. Got to sit on top of those all-time highs. 109,356 is that number to get that next all-time high leg in there for Bitcoin. And if it does, then we'll see that tail whip effect for XRP. For SUY, maybe that's what it takes to move us up to 497, and for ETH to move us up to $3,300. If you like this analysis, you want to see more of it, there's a link down in the description for the Discord. Join the earner tier to sign up and get unrestricted access to that Discord with everything that it has to offer. The BreadBot, the AI tools, the advanced charting tools, the panel experts that are over there to help you out, Stockmo who's over there to help you out, live trading. The BreadBot tells you when the big moves could be coming up or down for your favorite stocks and cryptos, you name it. The products and services are seemingly endless. The community has thousands of members. It's the best community that I've ever been a part of, and why I'm happy to be there and why I'm telling you about it today. Also down in the description, you'll learn about trading options. If you want to learn about technical analysis and how to use the trading strategy called the bread recipe, which I personally use. It is easy to set up, easy to follow. The BreadBot uses it as well, so you can also tell for yourself when those moves are coming your way. There's a coursework down in the description through Stockmo Academy. Sign up using the code word DOCTOR. When you do, it's going to save you a ton of cash. Bundling the courses saves you a ton more as well. And I'll tell you, they are top-notch, easy to digest pieces that you're just going to learn a ton from, and that learning can pay back in dividends. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.